If you are a Tesla investor, then you are probably investing your money for the long term. One thing about long investment and retirement is that you want to have enough money to keep you comfortable for as long as possible, and investing in the stock market may be a good idea. So if you have chosen to invest in Tesla stock for this purpose, then you should know just how much Tesla stock you need in your portfolio in order to retire comfortably, say in 2030. Hello everyone and welcome back to Tesla Tomorrow. Gary Black, CEO at the Future Fund and strong Tesla bull, has disclosed how you can retire comfortably with Tesla stock. There are three basic metrics that determine Gary Black's prediction for Tesla stock: Tesla's stock price, Tesla's EV delivery rate, and overall global EV adoption. In 2022, Black predicted that Tesla's market capitalization will soar to $4 trillion by 2030. According to him, the electric vehicle industry will reach a market penetration of 60% by 2030, and Tesla will achieve 21% of the auto market share. Gary Black is not the only investor that expects Tesla's market cap to reach $4 trillion. In March 2020, Cathie Wood also predicted that there was over a 25% chance that Tesla would be worth more than $4 trillion by 2025. The Tesla bull and her firm ARK Invest have previously aired a best-case scenario for targeting a $4 trillion market cap for the company, along with expectations that the stock will reach $3,000 by 2025. Tesla's stock price plunged more than 75% in 2022, one of its worst years on record. It also underperformed Bitcoin, the biggest cryptocurrency in the world. However, the price has shown a remarkable recovery since it dipped to $102 in January this year. The stock has regained more than 107% since then, and this recent surge in price is being attributed to the bullish Tesla quarterly financials, which showed a significant increase in its sales and revenue. And now to the big question: is Tesla's stock a good investment for retirement? The short answer is yes, and there are several reasons for this. Let's see them. But before we start, if you like this type of content, make sure to hit that like button, subscribe to our channel, and turn on notifications to stay up to date on everything happening with Tesla. Tesla is a highly divisive company, and it has die-hard fans like Gary Black and Cathie Wood, who believe that the company will do well and thrive in the future. Tesla is also investing in innovative products and is focused on its goal to achieve sustainable energy. Tesla is not only manufacturing products for the present moment, but also for the future. Its cars, batteries, solar panels, and trucks are designed for a time when the world will shift to clean energy, and this will be likely happening soon enough. These factors have made Tesla stock a good investment for the future. Therefore, adding this stock to your portfolio may be the best investment decision you've ever made. So how much Tesla stock will you need to retire by 2030? Keep watching to find out. Gary Black predicts that by 2030, Tesla stock could be worth about $269. However, this is only considering Tesla's earning from vehicles. Therefore, by adding revenue from Tesla's FSD software, which is already worth about $15,000, robotaxi, and perhaps robots, Tesla's shares will be likely worth close to $1,300 in 2030. Going by the price of Tesla stock at the time of this video, which is around $174, this means you can make eightfold your initial investment in Tesla stock. However, to reach this price in 2030, Tesla's EV delivery rate is one critical factor to consider. According to Black's estimate, with global light vehicle sales at 85 million units, Tesla would be delivering about 10 million vehicles per year by the end of the decade. Black predicts that Tesla's current fleet's existing sales will make the company around $140 billion. Tesla plans to produce 20 million electric vehicles per year by 2030. The car company also plans to construct new car and battery cell factories, and also produce more cars per year at its existing factories. Tesla recently tweeted the announcement of its 6th Gigafactory in Mexico, adding to its other Gigafactories located in Nevada, Texas, New York, Shanghai, and Berlin. Prior to Tesla's Q4 earnings call in January, the automaker announced that it is investing $3.6 billion into its first Gigafactory in Nevada. This factory will gain another 4 million square feet of manufacturing space for Tesla Semi and 4680 cell production. Tesla is focused on ramping up production across its factories, while expanding its market shares. To do this, the automaker plans to lower the prices of its cars. At the recent Investor Day, when asked about how Tesla could grow its market share in China, Musk stated that demand is a function of affordability, not desire, adding that even small changes in price can have a big effect on demand. Tesla's top executive in China, Tom Zhu, also added that as long as one offers a product with value at an affordable price, then there is no need to worry about demand. According to him, Tesla tries everything to cut costs and pass down value to its customers. While addressing Tesla's improving operational efficiency, Zhu cited that it took the company 12 years to build the first million, about 18 months to get to the second million, 11 months for the third million, and less than 7 months to build the fourth million. EV adoption rate is also expected to go significantly higher in the coming years. Total annual car manufacturing on the planet is around 80 million cars per year, and only about 5% are electric. Analysts predict that electric vehicles will be more popular by 2030, with 60% penetration, and Tesla, which is currently the leader of this booming market, will increase its leadership with a market share of about 21%. According to Gary Black, Tesla's production and deliveries will explode, as sales of global light electric vehicles should reach 85 million units per year, including 10 million sold by Tesla. The Tesla Bull predicts that Tesla's operating margin, which was 14.1% in 2021, will jump to 26.1% in 2030, thanks to an improvement in technologies related to batteries in particular. He added that the automaker's adjusted earnings per share, or EPS, would go from $6.79 in 2021 to $100 in less than 10 years. Likewise, according to a new report by the International Energy Agency, or IEA, EV shares in total automobile sales need to reach about 60% by 2030 to stay the course and reach net zero CO2 in 2050. The report stated that the global electric car shock will expand to almost 350 million vehicles by 2030, although the future growth will hinge on efforts to diversify battery manufacturing and critical mineral supplies to reduce the risks of supply bottlenecks and higher prices. It cited that mass adoption of electric vehicles will require regulatory support that advances installation of chargers in residential and commercial buildings as well as workplaces. Likewise, the deployment of charging infrastructure, especially in densely populated urban areas, will be driven by city codes and local policies. It is expected that approximately 89% of global EV charging stations will become private, located in places where access is the most convenient, such as at the home or office buildings. It is well known that Tesla has the largest supercharging network globally. The automaker hinted on a few developments with this service at the Tesla Investor Day. Tesla formally introduced an upgrade to its charging stations, which opens them up to vehicles that aren't Teslas in the United States. By opening up some of its superchargers to non-Tesla vehicles, Tesla can once again accelerate the transition to EVs and also benefit from federal subsidies. Likewise, the car company stated that in July, it will add a $30 unlimited overnight home charging plan to Tesla Electric in Texas, since Texas has large wind energy generation overnight, and they can serve Tesla's customers cheaper and more sustainable by pushing more charging to nighttime. Tesla is already on its way to becoming a leading charging company. The automaker has already added 646 new superchargers in 2030, with the closest runner-ups being ChargePoint at 146 stations. According to the IEA report, to make EV chargers more accessible and affordable, urban planners, building developers, and electrical equipment suppliers must integrate charging infrastructure into standard building design plans. EVs offer numerous benefits such as reducing greenhouse gas emissions and also lessening the dependence on fossil fuel-based sources. They also play a significant role in facilitating the transition towards more sustainable energy systems. Alongside its supercharging network, Tesla has also established unparalleled competitive advantages, which are about to increase further with its plan to introduce a lower-priced version of its EVs designed from the ground up. Other factors include its batteries and full self-driving software. How much Tesla shares do you need to retire by 2030? Let us know in the comments section, and don't forget to tell us what your valuation on Tesla is. If you would like to know what Tesla has been up to these past few days, go ahead and click on the next video on your screen. We'll see you there.